Did you know that paying down your mortgage faster than what you currently are is one of the most important things that you can do to create equity in your home? And why is that important? Because equity is investment property gold. If you're wanting to build wealth and you want to be a property investor, then you need equity, because equity is one of the most important ingredients for an investor to be a successful investor. So when you're going for a mortgage to get some lending to borrow for an investment property, the bank is going to consider your income situation, and they're also going to consider your equity situation. So the equity situation is massively important, and this is an area where a lot of investors struggle, because even if they've got good incomes, you still can't get lending if you don't have enough equity. So that is why I created something called the Fast Track Mortgage Plan. And the Fast Track Mortgage Plan is a tool, a plan, it's coaching that will teach you how to structure and pay your mortgage so that you can pay your mortgage down way faster than what you would otherwise. And of course, this creates equity. So I've got here 4 things that you might not know about Fast Track Mortgage Plan, and these are 4 things that will help property investor buyers so that they can go on their journey and be much more successful as investors. Okay, so number 1, it actually gives you a mortgage plan to follow. If you don't have a mortgage plan to follow, you've kind of got your fingers crossed that you're going to create equity. So equity can only be created 2 ways, right? Your property goes up in value and your mortgage goes down in value. That's how you create equity. Now, if you're just paying your mortgage in a standard way, just doing your regular repayments, you'll find that your loan is coming down pretty slowly. And then it's fingers crossed that your house goes up in value. Why would you want to put all the control of your equity in the market? Okay, that's just the market that determines whether you get usable equity or not. It can be a slow process. It's much harder work, and it's something that's just out of your control and out of your hands. However, if you've got a plan in place around how to structure and pay your mortgage, and you follow that week in, week out, month in, month out, you can see for yourself that your mortgage is going to come down much, much faster, and this gives you the equity that you need to get started with your investment property or to grow your investment property portfolio. All right, so number 2, having a plan to follow, such as the Fast Track Mortgage Plan, accelerates your equity growth. It means that you get equity much, much faster. So I've trained lots of people who have actually bought their first house in year 1, and literally a year later, they are now ready to buy their first investment property. That's pretty impressive, right? Because a lot of people have to wait a number of years before they have enough equity to go and buy an investment property. But imagine if you could buy a house today and then buy another one a year later. How much more wealth do you create as a result of that? And having available equity or usable equity to use is a really important part of that equation. And if you can create equity quickly, then that's a real winner. Okay. Number 3, it shows your bank that you know how to handle debt. Right? Because when a bank does an application for you and they're having a look at your figures and they're having a look at your mortgage and how you've been paying it so far, what they want to see is that you know what you're doing. Okay, and if you're on Fast Track Mortgage Plan, it's pretty obvious to the loan assessor that you know what you're doing. You look much, much better, and there's much more higher chance that you're going to get your loan approved because you look like a professional rather than someone who's just got their fingers crossed. All right, and number 4. Fast Track Mortgage Plan actually allows you to keep your regular repayments low, which will increase your chances of getting approved for an investment property. So now increasing your repayments pays your mortgage off faster. We all know that. That works. But what it does is it ruins your serviceability. So let's say you push your repayments right up because you want to create equity quickly, and you've done that so that you can pay your mortgage down faster because you want to get into investment property market. But then you go to apply for your investment property loan and the bank says no because you don't have enough income because your mortgage repayments are too high. All right, so that's actually not an ideal situation, and it's a situation that holds up a lot of investors because they focus on creating equity the wrong way. Okay, but if you focus on creating equity the right way, you can get the best of both worlds. So I hope that you found that helpful. Fast Track Mortgage Plan is an amazing tool that helps people grow their wealth and grow their investment property portfolio, as well as pay down their own mortgage, of course. And if you'd like to see if the Fast Track Mortgage Plan is right for you, then I'd encourage you to get in touch with us to get your own short report. So a Fast Track Mortgage Plan short report is a report that's a free report, and it will show you what you've got the ability to achieve if you were using our Fast Track Mortgage Plan. So get in touch. Would love to help you out.
For more financial tips, advice, and education, like, follow, and subscribe.